So if we're talking about why rates are going up, really, it's more than just the climate change issues. It's more of the uncertainty from an insurance carrier's point of view. How much do we charge? We don't know if we're going to have 3 storms in 1 year or 5 storms in 1 year or 0 storms. We don't have that statistics information anymore because the rules have changed.
Common Sense for Common Areas exists to help all 2 million HOA board members nationwide have the right information at the right time to make the right decisions for their future. If you're a board member, that's you. Stay with us weekly for actionable insights that minimize stress, avoid catastrophes, and protect your property values. This episode is sponsored by 3 businesses that care about volunteer board members: Association Reserves, Community Financials, and Kevin Davis Insurance Services. You'll find links to their websites and social media in the show notes.
Hi, I'm Robert Nordland of Association Reserves.
And I'm Kevin Davis of Kevin Davis Insurance Services, and this is Common Sense
for Common Areas. Welcome to episode number 6, where we'll be discussing the hot topic of the high cost of insurance. A regular feature of our podcast series will be hot topics and current events, and right now, there's nothing bigger than insurance. It's disrupting budgets all across the country and forcing boards to scramble in order to get sufficient coverage. So we're going to dive right in to make sure you have the insights you need to lead your association safely and successfully into the future. Before we get started, in case you've not had a chance to listen, I want to encourage you to check out our last episode, number 5, where we interview an inspiring board hero. But back to today's episode. Fortunately, co-host Kevin Davis has been serving the insurance needs of community associations for decades. So he's exactly who we need to give his perspective on what has changed that has created the increasing insurance costs that associations are seeing, and help us all better understand and be better prepared to deal with this challenge. So Kevin, let's start with a little background to give us a framework for today's discussion.
Sure. Thanks, Robert. Glad to be here today. Insurance is at a crossroads. And I mean at a crossroads that we're seeing things today that we haven't seen historically. My job is to evaluate risk and to try to determine how much it costs for a certain type of insurance, primarily directors and officers liability insurance, so that a company can remain profitable. That's my job. I don't sell insurance. I don't knock on doors and try to convince you to buy my insurance. I evaluate risk to make sure there's enough money in that pot so that when losses come, the losses are paid and the insurance company is making a profit.
And the right people are paying the right amounts. The high-risk people are paying more, less-risk people are paying less.
Exactly. The problem today is that it's hard to evaluate the risk to find out who should be paying a little bit more and who should be paying a little bit less, because there's certain factors out there that we have not seen in the history of insurance. When we evaluate risks and we look at all the exposures that a community association will have, or any community or any company would have, and we try to determine, okay, you have a condominium association, what can we do out there to make sure that this is insurable risk? And then we look at all the different factors that go into become a rate. And that rate is based on all these different factors. And then we determine the rate, and it's consistent and stable. For over the past 20 years, insurance rates have been pretty stable.
Yeah, just going up with inflation?
No, they have not been going up with inflation. And the reason, there's a reason for that.
Okay.
And that's the reason why we have the issue today. The issue today is based on the simple factor that there's more supply. There's more demand than the supply. Okay?
Takes us back to high school.
Exactly. When we talk about, why rates are going up, it all goes back to a simple thing: supply and demand. Okay? Historically, for the past 20 years, there was a lot of supply. There was a lot of insurance available. Capacity, we call it capacity available. Today, you don't have the same type of capacity that you had 20 years ago. And the reason why is because we're seeing things that we haven't seen historically. The number one thing we're talking about is climate change, all these weather disasters that we've happened over the past 5, 6, 7 years. The weather has been a disaster for community, for insurance overall. Insurance that's just, rates.
You're talking about
Rates
the
need to go because of
extremes.
that.
Yeah, the extremes. So it's not just the regular hailstorm or the regular, I'm in California, we're both in California, earthquake, or ice problem. We're talking about more hurricanes. We're talking about more wildfire. Is that what you're speaking about?
Yeah, and historically, we always had that 1 in 100 year storm. Remember, you used to hear those words?
Right.
A 1 in 100 year flood, 1 in 100 year storm, 1 in 100 year earthquake, 1 in 100 year. Those statistics are gone out the window now. So when it comes to insurance, what we do is figure out, we have to look at the statistics, and we say the likelihood of it being a major hurricane or major tornado or cold, ice damage. We know where it historically would be. However, with climate change, the way the climate has changed, we don't know anymore. It's hard to predict. And insurance is based on predictability. We know that in 2 years from now and 3 years from now, that 1 in 100 year flood will occur, and we make sure we collect enough money to pay for that 100 year flood.
But not if it occurs every 2 or 3 years.
Every 2 or 3, or you get 3 in the same year.
Yikes.
Yeah.
Okay.
So that's step one. So if we're talking about why rates are going up, we're talking about really, it's more than just the climate change issues. It's more of the uncertainty from an insurance carrier's point of view. How much do we charge? We don't know if we're going to have 3 storms in 1 year, or 5 storms in 1 year, or 0 storms. We don't have that statistics information anymore because the rules have changed.
Yikes. Yeah. I think that's the whole point there. The rules have changed. Well, tell me about some of the other things that I think about in the last few years. We've had COVID. Is that an issue?
Okay. COVID is a great example of a fear, again, as insurance providers, we worried about. We thought that based on the scenario that we would see a lot of claims. We didn't see a lot of COVID claims. However, we do know there's been a change in exposure because of COVID. We know that Community Association Board of Directors now have an increase of their exposures because they have to prepare. They have to maybe clean down things. They have to do things they haven't done before. So what it does, increases their exposure. And whenever exposures increase, the liability also increases.
Okay, so it's a factor, but not one of those big factors. What about, has it been when you have a physical disaster, you have a reconstruction? So has there been supply chain related issues? The costs are increasing? Is that one of the factors?
Again, you're talking about supply chain issues. You're talking about just basic construction, hiring contractors and finding drywall. Okay, you can't get drywall because there's so many things happening in the world. You're talking about it's a global issue more so than just supply chains issues. You're talking about the war right now in Ukraine and Russia. It stops things from happening. You talk about the way we handling things in China right now. These are all different factors that, from an insurance point of view, how do we rebuild? How do we put things back the way they were? We're talking about replacement costs. How do we replace something that's hard to get? So again, every factor we're talking about goes in. How do I determine how much to charge you for your building, condominium association owner? How do I determine that when things are so uncertain? Uncertainty really breeds the problem for us in insurance right now, this uncertainty that we have. We face this too much uncertainty.
You got me writing notes here. Uncertainty, supply and demand, capacity, risk factors. What about Champlain Towers South in 2021? That was probably another one of those things they just did not expect.
Yeah. See, again, we talk about uncertainty. I think we were introduced to uncertainty after COVID. COVID gave us something that we never experienced. We live our lives. We like certainty. We want to know what the world looks like. And from an insurance point of view, we want to predict everything. Well, once COVID happened, to me, we took 10 years of growth into 10 months. And so the world changed in 10 months. And now all of a sudden we got to pick up the pieces and figure out, okay, how do we determine how much to charge for these things that didn't exist before? We had a building that went down. When this building went down, it opened up the insurance company's eyes because we never believed that a whole building can go down like that and kill about 100 people. We knew balconies could collapse, garages can collapse. We knew certain things can happen that would, cause harm, but not significant harm the way that building did. So from an insurance point of view, what do we do about it? How do I determine how much to charge for a building there that's not capable of collapsing when we never thought about that before? And I want to add one more thing to that, Robert. All these buildings out there are older now. We're talking about buildings that 30, 40 years old. In this industry, we built a lot of condos 40, 50 years ago. Now we're looking at a lot of condominium associations that is older. So from an insurance point of view, how do we make sure those buildings are all safe? We never thought about that before. Today we have to think about it. Where we have laws passed about balconies and garages to make sure that they are sustainable. But what about the building itself, where they want to pass laws, but in the meantime, until they pass it, from an insurance point of view, we're looking at if a building goes down, how much it costs to rebuild the building, put the building back up, and all the liability that's really going to be a part of it, all the lawsuits that we're going to see as a result of a building going down.
Kevin, you got me glad that I'm not in the insurance business right now. When I think about Champlain Towers South, the turning point in the reserve study industry was that we always thought the worst thing we had to do for a client was recommend a special assessment. And that was unfortunate, but it was just, well, that's the right word. It was just money. And then with Champlain Towers South, all of a sudden we realized, wow, there's lives at risk. This is building safety. What you're talking about here so far, just in these first few minutes, we're talking about the weather extremes, exposing buildings, exposing property to more possibilities of things that you weren't expecting at this frequency. And then you add to that, the buildings are older. Then you add to that the decisions that the boards are making, tight budgets, especially in the last few years with inflation. Tell me, how much is just basic inflation factor?
Inflation is it's such a big factor because right now, if you think about if you want to tear your home down and put a new home up, okay, and so you know that you maybe save $100,000, okay,
right?
That $100,000 is worth nowhere near amount of money it takes to replace that home today. If just 5 years ago, you saving your money when you replace your home, it's going to cost about $140,000 because the lumber costs more money. To get contractors, they're going to cost more money. Everything going to cost more money. And to insure it now, you insured it 5 years ago for $100,000. You don't realize today you got to insure it for $140,000, $150,000. So all of a sudden, now your rate just went up, not because the rate of insurance went up, because inflation inflated your house to the point where you can't rebuild it based on the same amount of dollars you thought you could 5 years ago.
Right. You're not insuring a $100,000 house. You're now insuring a $140,000 or $150,000 structure. Yeah. Okay. All those complexities. And then what else are the factors? The time, the inconvenience. What about the human factors involved?
That's the human factors, which creates the liability part of it. Right now, we're talking a lot about the property part of it on the liability side. The liability part is I'm upset with you because you're taking too long, so I'm going to hold you responsible for it. I'm going to hold you responsible because you should have budgeted properly. You should have reserved properly. So I'm going to hold you responsible, okay? And after all, I don't have a place to live, You have to repair all the balconies, so we have to move out. There's structural damage, we have to move out. I'm going to hold you responsible, board of directors. I'm going to sue you because you're the one who didn't do the job properly. Now, this area is a big problem for not only community associations, for all of us, because right now, humanity is saying, I'm holding people responsible for anything that happens to me. Historically, we had trust. There was more trust involved. So I know you, Robert, you may be a board president, and I know you did the best job you could do in terms of taking care of the homes, taking care of our roofs. But guess what? I don't know you because I'm dealing with you through Zoom now. And so I'm going to hold you responsible because right now, my roof's been leaking now for several weeks now. You haven't done anything about it. So I'm going to hold you responsible. I'm going to file a lawsuit against you for property damage to my roof. That is our first course of action that we have these days. People suing the other person for damages.
Yeah. Is that more of an appreciation or more of a focus on self? Because just in your little hypothetical there, you could have been a homeowner in that association and you could have said, well, gee, Robert, you tried hard and we do appreciate you keeping the homeowner assessments low for all those years. I appreciate that. And now because of that, we're now facing a special assessment and oh darn, I guess we're in this together. And what it sounds like you're talking about is a change in dynamic where I'm hurt, I'm damaged, I am inconvenienced, and my problem is now going to become your problem. And is that what we're dealing with here?
And that's another part of it from an insurance point of view. All right, from a liability now, we're talking about purely liability where it's about lawsuits. And we talk about lawsuits, historically we say, okay, we know what kind of lawsuit's going to happen. The slip and fall on the premises, we know it costs about $30,000 because there's negligence, because they didn't take care of the trees, they didn't, put the proper gates up, they put the proper signage up, and so we know it costs $30,000. What happened now is that we're intentional. We want to do is cause you harm because you caused me harm. So now all of a sudden, I'm making it more that you are in violation. It's your fault. You're not maybe just negligence. You are a bad person. You did these things because you're not a nice person. You should have put proper signage up there. You knew you should have trimmed the trees. You knew you should have done these things and you didn't do it. So now it's the good guy versus the bad guy. And so now I'm suing the bad guy. And one thing we haven't talked about was you see these commercials, right? Well, guess what? I got my client $100 million.
I was just going to turn towards that. We're suing the bad guy. And I'm wondering, because I'm thinking nowadays, I guess a long time ago, it used to be the asbestos litigation, but now don't we have Johnson & Johnson and talc in the baby powder that we always thought was no big deal. And when it's a humongous corporation, which is a product of our times right now, we have larger and larger corporations. How much am I damaged? Well, that's a different question from how much can the huge corporation afford to pay and how much should they be punished for how much I'm damaged. Yeah, maybe it is part of the society that we live in. The associations themselves reflect the greater society. Is that fair?
Exactly. And that's what it boils down to. We in society, we have our jerseys on. We either red or blue, and everybody's either a good guy or a bad guy, or I'm a Lakers fan or whatever. But we're the good guys and they're the bad guys. Okay. And now that they're the bad guys, now we go after the bad guys. We don't have that middle ground anymore and say, listen, maybe we can work this thing out. And we can't. We want to win at all costs. And then guess what we win? Guess what we do win? We win a large judgment, large settlement out there. And we want to win that. First of all, we want to win no matter what. But then to get that large judgment, large settlement out there is an extra victory for us. It's like hitting the lottery these days. The board of directors has a job. Okay, their job is to make decisions. They make decisions every single day. They get sued because of decisions they make, and they get sued for decisions they don't make. They can be held responsible for why you didn't fund the reserve. I could be to fund the reserve more than you should have. You got a reserve study. You should have done it. You should have done more. And when that happens, all of a sudden, the board members, you feel that sense of loss. And again, it's funny. It goes back to our original premise here. Our job is to make these people who live in community associations aware of what's happening out there. And what's happening right there to the liability side is that they're being perceived as the bad guy, and the people who live in there are the good guys. I parked my car in visitors parking. Why is that such a big deal? Who are you to tell me I can't park my car in visitors parking? Yeah. Well, in the documents, you read the documents. It says you shouldn't park your car over there. You're in violation. Yes, but I don't believe the documents are enforceable. I don't believe they're reasonable, and you don't have the authority to do it.
Got it. The challenge. Again, the friction, lack of trust between two parties and the siloed society that we're starting to live in, where, as you said a moment ago, you're either a red shirt or a blue shirt. We've got basketball playoffs. We have baseball. We've got hockey. We've got so many things going on here that's opportunity to be mine versus yours, us versus them. That's
it. I mean, look at the Super Bowl. The Super Bowl is an amazing thing. Everybody watches the Super Bowl for one reason. It's my guys versus your guys. My guys are the good guys and you guys are the bad guys. It's like going back in time, like Roman gladiators. We were at a point in time in our lives when we label people as good and bad and winners and losers. A community association is a shame because we're all in it for one reason. We want to increase the values of our association. We want to live peacefully, we want to live in harmony. But if we're looking at certain situations and labeling them as the bad guys, labeling them as somebody who's not looking out for our best interests, then all of a sudden it creates this problem. And it creates a problem for us from a liability point of view, is because what do we charge? How do we charge a premium for just us being angry and upset with one another? It's not a slip and fall. It's not somebody, I haven't been damaged. A tree didn't fall on my car. It was just me being upset to the point where I'm gonna hold you responsible, that I've been suffering all type of irreparable damages because you're not treating me the way I want to be treated as a board member of an association. I want to use the pool. You can't allow me to use the pool. You have pool hours. I want to use it at 2 o'clock in the morning. I want to use the jacuzzi 2 o'clock in the morning. These are things that always been there, but they're more intensified now than ever been before.
Yeah, you're using the I word a lot in those last few sentences. I want. And then that gets into the bigger picture with community associations where it's my home, yet it's a shared home. And so there's that interesting difference between what's mine and what is ours and how I need to get along and fit into a group situation. I was thinking in preparation for this, we just renewed our automobile insurance. Mm-hmm. And if I am unhappy with how much my automobile insurance is, I can talk to my wife and we talk about, do we want to change our deductible? Do we want to change our coverage? Things like that. But in a community association, there's restrictions with governing documents. There's restrictions with the major lenders. As you said just a moment ago, the job of the board of directors is to guide the association safely into the future. You don't want to damage anyone's homes, damage anyone's property values. So you can't just say, oh, we used to have $100 million worth of coverage. Let's just go down to $50 million of coverage. Yeah. You can't do that because you have to have the coverage. So Fannie Mae, Freddie Mac, major lenders will continue to lend for homes in your association. How much of a factor is that too? Does that kind of pin board members into a corner?
It's hard. It's tougher than that. So if you increase your premium went from, let's say, from 10,000 to 13,000, so it went up 30%. Yeah. Now all of a sudden they say, well, how can we save money? How do we save money? And whenever they talk about saving money, the only way you can save money is increase the deductible and lower your limit. Well, increasing the deductible is not going to make that much of a difference, but what you can do is lower some limits, and that creates a big problem for us from an insurer, because when you reduce your limit, you don't have adequate insurance coverage.
You're fundamentally set up to upset the client, because if I want insurance when I wreck my car, I want to get my car fixed. But if I've reduced the coverage so much, then I've just set myself up for failure. I'm unhappy, and the insurance company gives their maximum payout to the limits of the policy, but nobody's happy. And so that's a bad situation to get into.
Yeah. Perfect example in your car, right? You have collision and comprehensive. So comprehensive means that, okay, somebody scratched the car. So comprehensive means they'll fix it as part of the coverage. Let's say you don't want comprehension anymore, you want just collision. So now all of a sudden that means you get in a collision with somebody else, they pays for it, but minor damages they don't. So you want to self-insure that yourself. Okay, you can make that decision as a person one-on-one, but from an association point of view, you can't make that decision. You have to follow the documents and make sure your home, your community association is insured to value. You have to insure it to value. And right now, there's two things happening. Board members are saying, we don't want to insure the value because we're going to save money. And what happened from an insurer point of view, because I said before, there's supply and demand. There is a lot more supply out. It's a lot less supply than there's demand. There's a lot more demand out there. So what happens is sometimes we're not capable of giving you the kind of insurance that you need, like the wildfires in California. Well, there's a lot of demand, not a lot of supply for it. So the people who are willing to supply it is saying, you need $50 million in insurance to insure your building. We only give you $25 million. And so you are self-insuring the other $25 million yourself.
Yikes. Well, in an association, you can't really do that. Don't you then have to go to company B and company C and company down the list, try to package together insurance so you have you're back up to your normal total?
Yes. Right now, Wildfires, it is extremely difficult to find. In other words, if my policy comes up June the 1st,
Okay.
and I need $100 million or $50 million, I'm going into the marketplace, I can only get $25 million. Now, my job's continue to look and look and look till I find that other $25 million to get to you with the exact limits you need, but it's extremely difficult. It is a major problem right now in Florida, where the property market, in order to get property insurance for buildings, is so expensive, and it's not even available. There's too much, there's not enough supply out there and too much demand that I can get you 25 million of the 50 million you need, but I can't get that extra 25 million. I can get 10 million, or I can't get wind and hail. I can't get flood. I can't get certain things. So like I said, in the car, you have collision, but you can't have comprehensive. You have liability, but you can't have certain types of liability. Right now, today, we're facing, it's kind of, I call it the perfect storm, where you have climate change, you have inflation, and then you have just the way we live today, and we hold on people responsible. From an insurer point of view, insurance carriers, how do we charge for that? How do we predict that? How can we model that to the point where we're going to make some money off of this thing? Because again, insurance, it's a for-profit corporation. They're not into it for the benefit of humanity. They're not.
Well,
they're in it to make money.
Yeah, the flip side is you say they're in it to make money, and we understand that. You own your business, I own my business. But the other flip side is, well, we don't want to go out of business.
Yeah.
We need to make enough money so we're here next year. Because if we're not charging enough money, we go away. And then the consumer is left trying to cobble together the insurance that we used to provide from somebody else. And that's not good for society when the company goes away. So the company needs to charge enough to be here next year. And that's got to be just crazy hard in an environment with all the uncertainties that you're talking about.
Mm-hmm. And what we do every year, we evaluate the losses that we pay. So let's say that at the end of the year, we see, let's say $10 million of losses. We look at the premium we get in. Let's say that the premium is $15 million in losses. Well, guess what? We made $5 million. We're happy. Historically, the ratio is about, 80%. So 80 cents, 80 cents in claims, they want to get $1. They want to get $1 for every 80, 85, something like that. So you make 15 cents on $1 in profit.
Yeah, that's fair.
Now what you're looking at is that profit margin is not there, especially for certain types of insurance, property, liability, it is not there. So sometimes for every dollar we take in, it's $1.25 paid in expenses. So we're losing 25 cents on the dollar. And when that happens, guess what happens? The rate has to go up to maybe 25% more than it paid before. But that's only for 1 year. What we do is look at the trends and see, all right, over the next 4 or 5 years, we're worried about what's going to happen. Again, it goes back to that first thing I said, that once in 100-year flood. Okay, we know we're going to be once in a 100-year flood. Now we just don't know anymore. So it's hard to predict what's going to happen out there.
Got it. Okay. Well, is this going to be the way it is in the future, or is this something that will maybe hopefully settle down in the next couple of years? Do you have any way of feeling what is ahead if you were to close your eyes and sense and predict 2 or 3 or 4 or 5 years into the future? Do we have a hope that this will settle?
Sure. This is the good news. The good news is that insurance has enough data out there to predict what the future is going to look like. And what they'll do is say, this is what the recommendations we make to make sure, we make a profit. And if we make a profit, the only way we can truly make a profit is by changing behavior so that people will do things a little bit differently so that they can afford to pay insurance. Insurance is the key to really changing behavior. I don't want to pay this kind of money for this. I'm putting the seatbelts on. For example, seatbelts.
I like that.
Or driving better, because I know that if I get in an accident or if I get go through a stop sign and get points, my insurance is going to go up. So I go to class. There's certain things that we do from an insurance point of view. We want to insure a building unless they have a reserve study. The future is great because insurance carriers been around for hundreds and hundreds of years. And they will always find a way to say, okay, we can make money, but we'll make money in a way where it makes society better in the long run. Because we'll tell you that in order to avoid these kind of claims, that's what you need to do. You need to build these. Just think of all the Florida storms that we had, and they tell you that these are things you need to do to your house in order to be insured. And then all of a sudden they put the storm drain, they put the windows in. So the good news is that insurance will provide the tools necessary for us to A, make it more affordable, and B, so we can live better with the climate issues we have, with the inflation that we have, and with the way we treat each other in terms of the liability parts of it. Right now, insurance companies are writing massive amounts of checks because we're looking, if we don't write these checks right now, if we go to court, it's going to cost us a lot of money. All this stuff's going to change. Insurance is going to make that a change in the future.
Well, thank you for bringing us to an encouraging point. There's things that we can do, and back to working together rather than being in silos where it's me versus you. It's the insurance company saying, hey, you were speeding, so you go to traffic school. Or me as a homeowner, the fire department and the insurance company saying, if you trim the bushes outside your house, we can lower your risk. And all of a sudden, we're working together for a solution, doing what I can, and the insurance company, as you've said, with their history of knowing what can affect human behavior change, working together for a better future. Well, absolutely fascinating, Kevin. So glad that we had this conversation. I want to get together with you again. You've talked about wanting to speak about the location-specific types of risks, the issues that come up, and we will have that in a future conversation, I'm sure. I hope you've learned something from our discussion today that helps bring common sense to your common areas. If you have a topic you'd like to have us address or questions you'd like us to answer, please call 805-203-3130 or email us at podcast@reservestudy.com. We look forward to having you join us for another great episode next week.
You've been listening to Common Sense for Common Areas. Thank you to each of you for your engagement and support. To continue the conversation, you can follow the social media links for Robert Nordland, Kevin Davis, and Julie Adaman in the show notes. If you like the show and would like to support us, you can do so in a number of ways. You can subscribe to Common Sense for Common Areas wherever you find your favorite podcasts, and please share it with another board member. You can do us a huge favor by going to iTunes and leaving us a 5-star rating and review. And you can also support us by supporting the brands that sponsor this program. You'll find links to the website and social media for Association Reserves, Community Financials, and Kevin Davis Insurance Services in the show notes. But the most important thing you can do is to engage in the conversation. You can email your questions or voice memos to podcast@reservestudy.com or call our 24/7 voicemail line at 805-203-3130. This podcast was produced by Stokelight Video Production and Marketing. With Stokelight on your team, you'll see sales grow as you reach more customers with videos that inspire action. See the show notes to connect with Stokelight. Finally, remember that the views and opinions expressed by the podcast, including host, co-host, and guests, do not constitute legal advice. We encourage our audience to consult with their own legal counsel before making important decisions.